Hello, in this presentation we will show how to create an invoice within QuickBooks Pro 2018, show the components of the invoice and what the impact of the invoice will be on the financial statements, the balance sheet, and the income statement. If you have been following along with us, that is great. We're going to continue on the Get Great Guitars problem. If not, that's okay, because we will be going over the invoice. And if you want to learn how to create the invoice and what the impact of the invoice as well as the components of the invoices are, then that is what we will take a look at here. If you have access to the backup file up to this point in time, you can restore that by going to File and Open or Restore. And we, of course, would be looking for the restore process, and that way we can be exactly at the same point in time. We are entering data here, so at the end of this process, hopefully we're all in the same place in terms of the data. If not, we can do these restore processes as we go just to make sure that we can still move forward, even if we made some kind of problems in the past. We will be working here with the creation of an invoice. We're currently at the home page. If you're not at the home page, you can go to the company and then home page at the top. Also recommend having the open windows open by going to view and then open windows, so we can go back and forth between the windows that we will be having open as we move forward. When we create an invoice, we're looking at, in the home tabs, a component of the customer section. So note that we have the invoice within the customer section. We look through our nice flowchart, which we have in the home page of QuickBooks. We see the process then is to create an invoice. Then we're going to receive a payment on that invoice and then deposit it. If you think about the process that we have seen in financial accounting most of the time, they often will skip this middle step here, meaning we typically are going to create an invoice that will create a journal entry, or that will increase the receivable, people owing us money, and it will increase revenue. And then we typically just go right to putting it into cash when we think about journal entries in financial accounting. We have an interim step here, which will be to receive payments. The main goal of that interim step will be that we're going to try to compile all the deposits that we're going to deposit at one time into the bank together, and then deposit it into the bank so that the grouping of those deposits will match what is on the financial statements to what is in QuickBooks. So in any case, this will be the first step to our process. When we generate the invoice, this is the driving document that will help to show us who owes us money. It'll help to record the revenue as we create the invoice. The invoice will be created at the point in time that a purchase is going to be made. Note that the invoice is not typically used if we were to receive payment at the same point in time, meaning if we collected actual cash at the point of sale, we wouldn't want the invoice, we would want to create a sales receipt. Difference being that the invoice will record an entry to accounts receivable, meaning it'll show that the customer owes us money. We are using the invoice if we expect to be paid in the future, if we expect to receive a check in the mail at some point in the future for work that has been done today. If, on the other hand, we got paid today for work that got done today, we will choose a create sales receipt. That then will record the deposit or the cash at that point in time and the sale at that point in time. We here will be making sales with an invoice, meaning we're gonna do the work, and then we're gonna have an IOU, an accounts receivable, and then expect to receive payment at some future time to receive a check in the mail. So let's see what the invoice looks like. We're gonna click on invoice here, and we'll create the invoice. Now I have a summary tab over here. I'm gonna compress this so that we can see more of the screen. And here's the components of the invoice. Now there's a lot we can do within the customization of the invoice, meaning putting a logo on the invoice and this type of thing to make the invoice more ours in terms of presentation. We're not going to cover that at this point. What we're going to do at this point is just look at the components of the invoice and see the functionality of the invoice. What needs to be input on the invoice. Once we input, what's going to happen. What needs to be in place in order to be able to complete the invoice. At a later time, we can look at some of the details in terms of the formatting of the invoice, the look and the appearance of the invoice. So in order to create the invoice, of course, we're going to need a customer or job. Typically going to start off with a customer here. The template, that's going to be some of the formatting. So we have a default template at this time, the Intuit service invoice. We need the date. We need an invoice number. This is another number that will be generated by QuickBooks typically as we create the invoice. The bill, the PO number if we have the purchase order. And we'll talk more about the purchase order at a later point, meaning if we are tying the invoice to a purchase order, then we would be tying this amount out. And we'll talk more how to link that. We've created a purchase order in a prior presentation. It is possible to link a customer to a purchase order, that document used when we actually purchase something, in our case guitars, from a vendor for a specific customer. And then when we create the invoice for that specific customer, we can tie those two together or pull that information from the purchase order to the invoice. Then we're going to have the terms of payment here, followed by the item, the quantity, and description. Now, when we get to the item, we're going to see where that's going to come from. We've taken a look at creating inventory items in the past, and that's where we're going to draw that from. It's possible to enter items as we go. It's also possible and highly recommended to have a list of items pre-set up so that when we set up the invoice, it's a nice, easy process, standardized process, one that we can do quickly, one that we can show someone else how to do without needing to know some of the stuff that we're going to go through here. So first, we're going to need the name, the person, the customer that we are selling to. In this case, we're selling guitars. So we are going to sell a Stanberger solid body guitar here, and therefore we're going to sell it to Anderson, not therefore, and we are going to sell it to Anderson Guitars. So this, if I start typing this in, the name of the customer, it's going to appear automatically if we already have that customer set up. If I didn't know and I wanted to check, we could select the drop down, see our list of customers. Here's who we are selling to. I'm going to tab through this, and I highly recommend as you go through these forms to get used to tabbing through the form. It's a lot faster. So I'm going to tab, and then the date we're going to have of this transaction is going to be 01/12/21, and that'll be January 12th, 2021. We are working in the year 2021 for this entire process here, and so just keep in mind that's the current date that of our worksheet that we are working with. And we're going to keep it at invoice 1. This is the first invoice we are creating. The bill address, note we don't have one right now because we don't have one in our system for Anderson Guitars. If we were to mail the invoice, that would be a problem. Probably would be best to have an address if we have one. Not required, however, for the invoice to be generated, for the invoice to create the journal entry related to the invoice. PO number, we don't have one. That's the purchase order at this point, and we're not tying this to a purchase order. The terms, we're going to usually have like normal terms. We're going to say it's just going to be due in net 30. So it's due within 30 days. Then the item. So this gets down to actually what the guitar we're going to sell. Now, if we have all these set up like we should, this should be a nice, easy process. How do we have this set up? We've done it in a prior video, but what we do is we go to lists, and in the item lists, we should have all the items. So here's our inventory items over here. We're selecting from the inventory items. We are looking for that Steinberger solid body, and then here's the item number. So that will make it really easy to give someone else the authority to create these invoices and not be able to have to type everything in there. They already have it. If they start typing in the GTPR, that's our item number tab. It's going to format everything for us. We're only going to sell one of them in terms of quantity. The description should fill out. And then we should have the rate and the amount. So we have all that is going to be put in place at the same point, at the point in time that we create this. Note what is not here. What is not here is our cost. And so if we go back to the item list, notice I'm toggling through the open windows. And if you don't have the open windows, view Open Windows tab. If we go back to the item list, we can see that this solid body had a price here. If we edit it, go to items and then edit item, we see that the cost is $328. That's not shown on the invoice because clearly we don't want to give that to the customer, but it is going to be recorded. And this is what we have to understand when we create these invoices and when we generate them and when we record them in terms of what's going to happen to the financial statements. So if you're selling physical things, inventory, I'm going to go back here, going to go back to create invoices. We need to know that we're going to have the sales price, the sticker price on the guitar, but we're also going to have that behind the scenes cost that will be recorded. If, on the other hand, we are creating an invoice for a service like bookkeeping or something like that, then we're just going to have the sales price and that's it. We don't have any cost of goods sold. In this case, we're selling inventory in this particular example, and therefore we do have a cost of goods sold. We'll consider what that cost of goods sold is doing when we look at the financial statements. Note, we typically will have tax if we're in an area that has sales tax. That too is something that we set up in advance, put it in the type of tax, the amount of tax in accordance to the location, the state, and the locality that we are at. We used a 5% sales tax. Therefore, we're calculating another $20.50, and QuickBooks will then do that calculation for us, put it into a liability sales tax payable that we will then have to pay to the state at some point in the future. This then being the total amount that is due. What will this do when we select Save and Close? It's going to record a journal entry, and we'll take a look at it. It's going to debit the accounts receivable, meaning Anderson owes us money. It's going to credit the sales account. It's going to also debit cost of goods sold, and it's going to credit the merchandise inventory. So let's see if we can take a look at that, go to the financials and drill down on that. And even if we don't know debits and credits, we'll kind of get an idea of what's going up, what's going down, what's the effect on net income. Let's do that. We're going to say Save and Close. And you've charged Anderson terms for this transaction. This change will reflect. And we're going to say, yeah, go ahead and save that change. So next time we work with Anderson, it'll have same terms. Then I'm going to take a look at the reports. So I'm going to take a look at our main two reports, balance sheet, income statement, otherwise called profit and loss by QuickBooks, by going to the reports up top, selecting the drop down. We're going to go to company and financial. We're looking for the profit and loss. Going to change the dates to the dates we are currently working in. Those dates being 01/01/212, 12/31/21. Then we're also going to open the balance sheet. So we're going to go to the reports tab. We're going to go down to company and financial. We're going to scroll down within there to the balance sheet standard. We're going to change the date to the current date we are working in, ending at 12/31/21. Now, as we drill down on this data, we might want to have a date range here so that when we drill down, notice if I double click on cash, it only shows two date ranges when I'm of the same date when I'm trying to look at the activity. So if we want a date range here, I'm going to close this back out. Whenever we look into one of these accounts, drill down on it or auto zoom, then we could customize this report so we don't have to change the dates each time. So we'll go to customize report, and then I'm going to change the date, the beginning date, to 01/01/21, January 1st, 2021 to December 31st, 2021, and OK. Now we can see what is happening here. Now note, we made a sale to Anderson, so we would think accounts receivable would have a transaction. So we're going to double click on accounts receivable. There we have the accounts receivable increasing by that 430. If we double click on it, we see our invoice. So there's the invoice we've created there. I'm going to close this out. We know that the other side to accounts receivable on the income statement is sales. So that's our profit and loss, or our income statement. So I'm going to go back over here into our open windows. Sales is merchandise sales. If we double click on that, we see once again our Anderson guitars increasing sales. If we zoom on that, we're back to our invoice. So there's the 1/2 of our invoice, increasing the AR, the asset, increasing the invoice on sales on the income statement side or the profit and loss side. So I'm going to close that. And then if we go back to the balance sheet, we also know that another thing happened because we sold inventory. That being that the inventory is going down. So here's the inventory. If we double click on that, we see that this inventory is going down by the 328, a number we did not see on the invoice. If we want to prove that, we can double click on it. There's the invoice. We don't see the 328 because, of course, it's not on the invoice. But QuickBooks knows that that's the cost. I'm going to close this. That's what it's bringing down the inventory accounts by. The asset accounts going down by that. Going to close this. The other side of the asset account going down is cost of goods sold. So I'm going to go back to profit and loss. And we'll take a look at the other side in cost of goods sold. And we see that 328 right now, right there. And if we double click on that, there's the invoice once again. So there's 4 components that are really happening here. The invoice is a little bit more confusing than we might see on the initial post. And when we just create one, we can create invoices all day and not really understand the effect on the financial statements. And that's great because it helps us with data input and helps us to get other people to be able to create invoices without, knowing what the effect is on the financials. The effect on the income statement is revenue went up 410. Cost of goods sold, however, also went up 328. So our real revenue, our net income from this transaction, this being our only transaction for the time period so far in terms of the income statement or profit and loss, is net income of $82. One other report it's worth just taking a look at that is affected by this, and that would be if we know that the accounts receivable went up, and we could see that that went up by the 430, we also need to know who that is owed from. And we can go to Reports dropdown. We're going to go to Customer and Receivables, and we want the Customer Balance Detail Report. Looking at this report, we can see that Anderson owed us money before, and now they owe us another $430.50. Here's that receivable, also on the Customer Balance Detail Report. And once again, we can drill down on that, and there's our invoice. Now we're going to close this up. We're going to do this one more time with one more customer. So I'm going to close this back out, and we're going to go back to the Home tab. And let's go back to the Home tab at the bottom, and let's repeat this process with one other customer here. So we're going to say that we're going to create an invoice. This time it's going to be for Jones guitar. We're going to sell a Gibson USA guitar. So it's going to be for Jones. And so if we type that in, it will then pull up if Jones is already a customer, as Jones is in this case. So there's Jones guitars. We're going to select tab. And we'll tab through this. We're going to have the template. We're going to say the date this time is going to be once again January 12th, 2021. Invoice number 2, and it's going to autofill. Bill, we don't have the bill to. Well, that would be the address of Jones Guitar, which we don't have at this point, and it would be nice to have, but not required in order to record the journal entry. We're going to keep it simple. Purchase order, don't have one at this point. We're not tying this particular invoice to a purchase order. We will do that, however, note in a future presentation. Terms, we're going to have the terms. I'm going to change the terms again to that net 30. So it's due within 30 days is what the terms mean. And then we're going to have the item is going to be the Gibson USA. Now the item number for that is GUS. And once we have that, then we're going to say tab, and it'll auto-populate everything else given the information that we have in our item lists, which we had prior put in accordance to the inventory items, including the sales price, as well as the cost of sale. We see the sales price here. We don't see the cost of sales, but the QuickBooks program knows it. So we're going to say that we have one there. Tapping through this, we have the sales price, and then we're going to calculate the sales tax on this. That's going to be the $19 for us. That will vary from state to state, from location to location. That gives us the $399. That then the check that we expect to see in the future. We're going to go ahead and save and close this. And I'm going to cancel this. It's probably best that we turn off the print later option. We're not going to be printing these at this time, but if you were to print it, you can go to the printing option here and print it as a PDF. We'll take a look at the printing and how we can do that. So we're going to go save and close, and yes. And then if we went back to our reports, just to check this out a bit more quickly this time, balance sheet, we're going to say that what happened in the receivable, same date range as we have here, should be in accounts receivable. We see that it has increased again by now the invoice for $399. Closing that out, we see that it should be in inventory assets, double clicking there, decreasing inventory assets, closing that out. Other side is on the profit and loss. We see that merchandise sales should be increasing, double clicking on that. There we see it here. And if we close that out, cost of goods sold being the other side, double clicking on that. And here's the cost of goods sold, closing that out. Now let's go ahead and go back and print that invoice just to give us an idea of the printed invoice and what that would look like. Back to the Home tab. I'm going to go to Create Invoice. I'm going to try to find that invoice again. A couple ways we could do it. We could go to the form and double click on it, or we could go to the invoice and hit the back arrow. And there we see the invoice again. We're going to go ahead now and print this invoice. Now note that when delivering the invoice, we could email it. We could send by email. We could print it out. We could mail it. Either way we want to do it. I'm going to go ahead and print it and take a look at what the actual invoice will look like. So if we print the invoice, now I'm not going to print it to a printer. I'm going to print it to a PDF file. So I'm basically saving it as a PDF file. A PDF is kind of like a digital printed document. So I have what's called a Qt PDF printer. That's going to be one type of printer. It's a free type of printer that can be used so that if there's no like save as PDF option, we can print to the printer. Notice we have a few options in terms of print on Intuit printable paper forms, black paper forms, letterhead. So you have a couple different options there. I'm going to go ahead and say print. And this process with this type of printer, the Qt PDF printer, it's a free download, would take a little while, and sometimes it requires us to point it where it's going to go to save it. So here we have it. And I'm going to put it on the desktop. I'm going to put it on desktop here and see if I can find through all the stuff on the desktop where we want to put it. We're going to put it in Get Great Guitars on the desktop. I'm going to put it into section 7. And then I'm just going to change the name here to Jones Guitars Invoice. And then we'll put the date of the invoice, which is 01.12.21. Typically, you want to put points or just have nothing in between. You can't really have dashes if you're using a Windows-based computer. If you're using a Mac, then you may be able to have dashes within the dates. So I'm going to save that. And we have that. Now I'm going to go ahead and go open that up and see what it looks like. So here is the invoice. So we've got our name, our address, we've got the date, we got the invoice. We don't have the bill to date because we had not filled that out. We don't have a PO number, purchase order, because we didn't have one. Terms, there's the terms that's due within 30 days. We got the one Gibson guitar rate amount, and then we've got the total down here, and of course the sales tax included in the total. So it gives you everything you need within just the basic format of the invoice is all you need. Obviously, we could make it look a lot nicer by adding letterhead and our logo at the top and whatnot. And we can get into those types of things at a later time. At this point, we're just getting down to the basics. This is what, if you wanted to just make an invoice, get it going, make sure that we're tracking what is happening, know what is happening within QuickBooks. That's what we're looking at here. And then we'll get into some of the features in terms of how to make the invoice look a bit nicer and add some of the features in terms of logos. There's a lot of options within QuickBooks to do some of that customization process, which is nice.